whomever can unlock traditional finance using blockchain will have a really big advantage.
How are you going to create an economy around something that's just far too expensive to use? It just will not thrive, on top of us still trying to find a product market fit.
Real things take years to build, but you need to keep people's attention during that entire time, and it's really hard.
From Alysia and Ellie, welcome to Composable, a podcast that takes you deep into the tech behind Web3's building blocks.
Every episode, we dive into one key question about how crypto works today and the design space for how it might look in the future.
Composable is an espresso pod, a production of Espresso Systems. All opinions expressed by Composable's hosts and podcast guests are solely their own views. This podcast is for informational purposes only and should not be taken as investment, legal, or technical advice.
I can't believe it's episode 13, and in this episode, we're going to address Ethereum FUD. The time has come.
Yes, so we have this Ethereum FUD dice that Jill from Espresso made a while back, and we're going to roll it and kind of give our opinions about each one. So the original idea was Bitcoin FUD dice, and this was made by Nick Carter a long time ago. And they just have common criticisms that people have of Bitcoin. So the Ethereum FUD dice are the same, but for Ethereum. They're all of the kind of memeable criticisms that people say about Ethereum that may or may not be true. We will see.
Yeah, let's get into the FUD.
All right, let's roll the first one.
Okay, so I have the dice. I'm about to roll it. Okay, so the first one that we got is fees too low.
Fees too low. Okay.
This one is a surprising piece of FUD, right? Because I don't think people automatically think about fees being low a bad thing. And here we have some tweets talking about it. So for example, this person said, okay, ETH transaction fees have fallen to 9 cents, the lowest it has ever been. And I think that was actually tweeted today or sometime. Then this other person is saying it's not fair to criticize ETH both for having too high and too low of fees. And I couldn't relate anymore. So where does this rhetoric come from? Fees too low.
This rhetoric comes from the idea that if fees are really low on the Ethereum blockchain, that must mean that no one is using it. And it's losing users to L2s and to other L1s. And this is a sign that Ethereum is dying. So that is the FUD behind Ethereum fees are too low.
Interesting. I mean, and then in some ways, somebody would say, well, maybe L2s have been successful because that was kind of the point, but maybe not on Ethereum. Like, did we expect the fees to remain high on Ethereum whilst we had low gas fees on L2s? Or did we expect to have low gas fees as a result of taking some of the load off of Ethereum? Like, what did we actually expect with fees on Ethereum and L2s?
Yeah. I mean, I think you would expect that the fees on Ethereum are always going to be higher because that's the point of an L2. And
right.
Ethereum it can't handle all of the transaction volume that all of these L2s have combined with the L1. But I guess it's really hard to say, like, how expensive should fees be? Who knows? I don't know. They shouldn't be too high, but they also shouldn't be too low. I don't know. I feel like it's just one of those things that has like no answer, and people will just always complain about it one way or the other.
100%. It's like people complaining about the weather. It's too hot. It's too cold.
Mm-hmm.
Like Mike said in this tweet, right? But I think also when I think about being a validator, now I have run an Ethereum node, but not for profit. But let's say I had a data center or, I just running Ethereum nodes, whether on AWS or something, I'm paying for those nodes to be run. So since the validators are actually getting paid in the fees, and if the fees are too low and it's not profitable for you to become a validator, that could actually be a bad thing. Like even when the Bitcoin halving happens, I do see some tweets, like some FUDs being created around Bitcoin as well, because they're like, okay, if the fees become too low for validators, because now each block releases less Bitcoin, so exactly a half of the previous amount, then maybe validators are no longer making the profits that they'd like. And then they decide to leave the Bitcoin ecosystem or the Ethereum ecosystem. And then that, reduces the decentralization. In the case of Bitcoin, reduces the hash rate. So like I saw that kind of energy as well, fees too low. And I think that is definitely valid. And even in L2s, like if you're running an L2, if you operate an L2, then the fees need to be high enough to cover the cost of running a sequencer. Now, I don't know how much it costs to run a sequencer. That information I don't think is public, but I think that is definitely something that every blockchain ecosystem thinks about, how to reward validators or key players in the system that keep it operational.
Yeah, 100%. And so I guess that's one part of the nuance that you described. Another part of the nuance here is that, in my opinion, fees react to different things. So, for example, this past, or actually over a year ago, blobs were released, and this affects things because now in theory, it should be cheaper for rollups to post data to the L1. This reduces L1 costs as well to some extent. So I think that I'm not an economist, but my point is that fees are very dynamic, and to a certain point, they're just always gonna go up and down within, like, a certain range, just due to, like, protocol upgrades, economics, like, all of these things, but it's not really meaningful, I guess, or we don't know if it's meaningful. I think we're too quick to say, "Oh, fees are too low."
Yeah, definitely. And I think people who are more of the investor type, they definitely
Mhm,
look at fees a lot, because if they're investing into Ethereum and the ETH itself is not being used at the same rate as it was being used, let's say in the DeFi boom, which is when fees were very high, then the utility of ETH, they can say, okay, well, the demand is going down, so therefore, what are my bags doing? So I think that's
mhm.
probably where some of the rhetoric comes from, because the idea of ETH being deflationary is something that investors really care about and really hope for. So I think, like you mentioned, with the blob space and the fact that we now have, or we as in like L2s now have a way to post their transaction data to Ethereum in a very smaller size, therefore costing them less gas fees, is not necessarily seen as a good thing to investors. And I think because we have so many different archetypes of people involved in the blockchain space, like it's very impossible to satisfy everyone at the same time.
Yes, I agree. And to that point, we have so many like different groups in the blockchain space, and they're all have different price sensitivity. So, for example, there are
Mm,
users, of which I am one sometimes, that say the Ethereum L1 is too expensive. I'm going to go use an L2. But then there's other times where I'm like, it's not that bad. Like I'll use
mm,
it anyway. And I guess the issue is that we just have so many mix of these people that have different price sensitivities and
yeah,
would consider different gas prices low or too high to affect their behavior.
yeah.
It's just kind of hard to make a sweeping generalization about fees in general.
Yeah. I think you opened up another can there, because if you think about the product market fit of blockchain technology and who actually would benefit from using it, a lot of the times it's like, these massive countries that have a large population. Not everyone has access to a lot of funds to be able to participate in the blockchain space. So therefore, fees being low is a good thing if we think about
Mhm.
what blockchain is meant to solve. So what are we doing, guys?
Yes. Yeah.
Oh wait, so what do you think? Is this FUD real or not?
I think it's totally not real.
Yeah, I'd
Ethereum
say the
fees
same.
being low are generally a good thing.
Yeah, I'd say the same thing. We needed to scale Ethereum, guys. Get with
Yeah.
it. Okay, so about to do another roll.
Oh.
And we got, Parasitic L2s.
Ooh, okay.
That's actually a great follow-up.
Oh, okay. So parasitic L2s. Yeah, this is a really good segue from the last dice roll. The history behind this is, are L2s parasitic to Ethereum? There's kind of two camps here. One camp is that L2s help scale Ethereum. They are beneficial to Ethereum. They are using Ethereum security. They are part of the Ethereum ecosystem. Then there's the FUD, which is that they're parasitic. And this says that L2s are taking users away from Ethereum as the L1, and this
Mm,
is degrading the value of the L1. L2s are taking away value and they aren't putting any value back into Ethereum. So they're kind of getting this security for a very low cost because all that they're paying for is DA. So that's kind of like the history behind the FUD. And this was a pretty controversial topic. I mean, it still is, but when it was coming up a few months ago, people had pretty strong opinions about whether L2s are parasitic or not. And so I guess I'll ask you, what do you think the nuance is in there?
I think we needed L2s to be able to encourage people to continue to use the Ethereum ecosystem. And, when we first started off in the blockchain space, we had Bitcoin and then we had Ethereum. People were using Ethereum a lot in the DeFi boom because now you had more utility than just buying the asset to store value. So that was brilliant. People were doing different things, gaming, etc., NFTs. We heard about all of it. But then now we enter a situation where the fees, like you said, it was, was it $100 for you to remove your position from Uniswap?
Yeah. Yeah,
Yeah,
back in 2021, at one point, it was like, over $100 for me to, unwind my position in Uniswap, and so I couldn't do it because it was not worth it.
yeah, exactly. And I doubt you made that much in fees, right? So how are
I
you going to
didn't, yeah.
create how are you going to create an economy around something that's just far too expensive to use? It just will not thrive on top of us still trying to find a product market fit. So I do think L2s had to happen. I think the reason why people find L2s to be parasitic is because people still in general believe not only in Ethereum, but also in ETH as a cryptocurrency. Like a lot of people want ETH to have a lot of value, just like how Bitcoin has a lot of value. So that's why I find that even if you do have a technical reason as to why you may prefer Ethereum over L2s, like for me personally, I would love to use Ethereum a lot more because I feel like it's more secure. It has a more decentralized validator set. So for that reason, I would love for Ethereum to have lower gas fees so I can feel comfortable using it or I can afford using it. It's not about
Mm.
comfort, it's about the money. And if L2s are finding a way to take off some of the activity and then make it possible for those who do have to use Ethereum because maybe the NFT is on Ethereum that they would like to use, then that's perfect. So I would say it is definitely nuanced. I think for technical reasons, scaling Ethereum via L2s was the most feasible at the time. Maybe, now and also in the future, there will be better solutions where L2s become less relevant. But even then, I think people still see a use case for blockchains that are maybe more specific for certain scenarios. Just like there's Lens Chain, which is meant to be for social media. So I think that it being parasitic might probably be a VC POV more so than a technical POV and even a user-friendly POV. But yeah, I would say I disagree. I would say that is, I don't want to say it's FUD. I could understand it, but for me personally, I disagree with that FUD. What
Yeah,
about you?
I totally agree with you. I think that yeah, I can see the argument that people make, and like you said, it's really about the argument of ETH being money and wanting to be this store of value, and I
Hmm.
think that that's related to L2s, but they're kind of separate things. So, for example, if an L2 charges all of its fees, like its gas fees, you could imagine that maybe some of that flows back to the L1. But does all of it flow back to the L1? Well, no, because you're not actually increasing the value of ETH. It's like it's all of it just depends on the parameters of the system, I think. Like we can't
Yeah.
say whether or not the ETH value from L2s flows back to the L1 unless we know more information about the parameters of the system.
Yeah.
But I agree with you. I think that the L2 roadmap was the right choice at the time, and I think that not only have L2s given users this, like, cheaper, experience, but I think they've also really pushed forward a lot of technology, like ZK technology, consensus, protocols, like, all of these things were able to be pushed forward because L2s, like, had a reason to go do it, and they had funding to go do it. And the EF themselves, like, I absolutely love the EF, but it's, like, probably you can't do everything yourself. Um,
Hmm.
so I think I agree with you. I think this is mostly it's mostly FUD. I could see maybe some like particular L2s being parasitic to the L1, but I think in general L2s bring users into the entire Ethereum ecosystem um, more than they, take out. So that's
Yeah.
my
Yeah. I love that take. Perfect. Another rule.
yeah.
I wish you had a dice too, so you could rule.
I know I really ran out before I got one.
Fragmentation. Can we get into
Fragmentation.
that? I mean,
Yeah,
this is
fragmentation is
composable.
such a meme at this point. So, what do people say when they talk about fragmentation? Well, they're talking about L2 fragmentation and usually liquidity fragmentation. And the idea behind liquidity fragmentation is that you have all of these L2s plus Ethereum, and they all have their own liquidity.
Mm,
And if I want to use liquidity on a different chain, it's this whole cumbersome process of bridging. It's really inefficient. I have to like lock up my capital. And really, it would just be better if all of the liquidity could just be accessible all in one place. Like that would be the most efficient thing for the money. And the more liquidity you have, the better price discovery that you can get. And generally, it's better for users in general. So the idea is that with all this fragmentation, we're hurting users. It's a terrible UX, it's a terrible user experience, and we need to fix this. Yeah, so that's the history, and I think if you go back, I mean, even now, if you go, if you go on like almost any single blog post that talks about liquidity fragmentation, like the first line is always, you know, Ethereum was great, but then it couldn't scale. So then came the L2s, and then we had fragmentation between the L2s and insert solution to fix fragmentation. That's like how they all start. So I do think that liquidity fragmentation is definitely a problem. I think that there's different levels that we can solve it at, and I don't think all of the fragmentation needs to be solved at the most rigorous level. So, for
Mhm.
example, the most ideal solution would be to have everything on one chain. So have everything on Ethereum. That's the most ideal solution, but y that might not be very practical. Well, some people might argue with that, but, uh, is it practical to have, like, Ethereum support all of the transaction load that we expect in the future and all of the DA load that we expect in the future? Probably not. So this is why you have L2s. But then it gets tough because the reason you have liquidity fragmentation is because you can't do real-time updates between different L2s. So an L2 produces a block, and if someone wants to use that block to do something on a different L2, there's always going to be some time delay. And in that time delay, you always lose some amount of efficiency. There's going to be some amount of price change,
Mm.
etc. So you always have slippage that way. And that's not good. In my opinion, I think that we can have a spectrum of liquidity fragmentation solutions. So I think some solutions we really do want perhaps much more concentrated liquidity, and maybe something like Uniswap, if they have Unichain, it makes sense to kind of bring all the liquidity together. I think for other things, you want liquidity that's easily accessible, but it doesn't necessarily need to be instantly accessible. So I think a really good example of this are intent bridges, like we talked about last time,
Mm.
because intent bridges allow users to have access to the liquidity, and then behind the scenes the solvers are actually rebalancing that liquidity. And so
Yeah.
that's a situation where the users get a great user experience and they get everything they want, and then the risk and capital inefficiency of rebalancing is on these sophisticated parties. And so, like, is it really that bad then if liquidity is fragmented, if the users end outcome is that they get a great bridging experience? uh I don't know, I don't think so. Anyway, that was a long rant. What do you think, Alicia?
No, that was great. You touched so many great points. Just to piggyback on the last one that you said, which is like, is it such a bad experience if, they have access to these intent bridges, which makes bridging so much easier and they don't have to worry about, actual bridge mechanics. But I think I've heard someone say like the best bridge is no bridge. And
Yeah.
like the fact that you still
Mhm.
have to bridge is still like you still have to go to an intent bridge protocol. So you have to be very intentional about using an intent bridge. You know what I mean? Like
Mhm.
you have to know that that's what you want to do. So it still isn't great. And I think fragmentation and L2s are something that kind of goes together, right? Like if you didn't have L2s, would you have fragmentation? But I would argue you can still have fragmentation on Ethereum. So for example, everyone uses the ERC20 token, but if someone was using a different standard for representing that kind of asset, then that would be fragmentation. And that means two apps wouldn't be able to speak together, even though they're doing fundamentally the same thing. Or, if you have a wrapped asset and then the other protocol doesn't accept that particular wrapped asset, so the liquidity could be fragmented even on Ethereum. So, but we had standards and it was just a lot easier to organize because there were just EIPs, which in of
Mhm.
itself is like a beast. But now we have the cross chain activity, which is what L2 brings. So I think the fragmentation arguments, I think this one is a little bit stronger than the others, in my opinion, because if you go to a
Mhm.
chain like Solana, you're like fragmentation where? Like,
Yeah.
like you don't have L2, so therefore the
Mhm.
fragmentation argument is not that strong. But it is, again, just related to the history of Ethereum being the first smart contract blockchain, and therefore having to scale wasn't as easy as someone who comes around later, like a Solana, and then create a different solution. And mind you, they are sacrificing various things, like they are sacrificing some levels of decentralization to be able to be fast so that they don't need layer twos. So, I think like the fragmentation argument is definitely worthwhile. And I feel like people think a lot about the users, but not so much about developers. I think that we don't really have any or many interesting cross-chain experiences because it's kind of hard to build interesting cross-chain experiences. And as we know with bridges, there are so many exploits that happen, which is the fundamental, like that's the quintessential
Mhm.
cross-chain app, which is a bridge. Makes sense. We want to move value from A to B, but it's not easy to build. It's complicated, different trust systems, and not every chain participating is very clear with trust systems. So I think we not just have fragmentation in liquidity, we have fragmentation of security, we have fragmentation of like apps and communicating with apps.
Mhm.
Like people might not realize if you go on an L2, the security assumptions that you have might be different compared to Ethereum. Only because you're like, oh, it's an EVM. Like, what could be so different? I mean, plenty, apparently. So yeah, I think the fragmentation one, I would say it's stronger. The intensity of the FUD depends on the use case, depends on the PMF. Like, if
Mhm.
the point of us using blockchain technology is to have open financial systems, is to have a way to easily transact value, then perhaps it's not so much of a FUD because I mean, you can't do it. Just pick your chain and be smart about it and use a bridge when you need to.
Mhm.
Like, it's not that deep.
Yeah.
But if, we are thinking about just from like a blockchain first perspective, like we live and breathe blockchain, I feel like when you are like properly deep in the blockchain ecosystem, then you start thinking about the efficiency of these blockchain ecosystems and the fact that the fragmented liquidity definitely decreases efficiency. So from that perspective, I would say, yeah, this FUD, más o menos, yeah, more or less.
Mhm. Yeah, I would agree with that. And maybe a second part to this FUD is that is this fragmentation like solvable or not? So I think you have people in the camp of that, this fragmentation is completely solvable, have synchronous composability between every single chain and it'll be perfect. And that's obviously not the case, or at least I strongly believe that that's not going to be the case. And then I think you have other people who are just like, oh, it's not ever solvable at all. But I think the truth is somewhere in the middle. I think that
Mm,
there's a lot of different parts to solving fragmentation. So there's things like the wallet experience, which, account abstraction is looking to solve. Like there's wallets out there that aim to completely abstract away all of these chains for users. Then there's things like Espresso and these cross-chain messaging protocols that help actually facilitate that cross-chain communication. And then you have things, like proof systems that are going to help prove these like state transitions across chains. Anyway, the point is that there's a lot of different layers to solving fragmentation, but yeah, I would say fragmentation is a very real like problem in Ethereum.
yeah. Okay, guys, you have it. The fragmentation FUD is actually a bit real.
Yes.
Okay, so another rule. Let's see. Okay, so this one is no North Star.
All right, no North Star. So this was FUD recently, and the idea is that there's nothing specifically that Ethereum is targeting to be the best at. They're kind of trying to scale, but also offer decentralization, also offer this asset of ETH, which is supposed to be worth money. A lot of this FUD was especially in contrast to Solana, which is very clear about its goal, which is just to have a really fast blockchain. Solana just has different priorities, but they're very clear about their priorities and what they want. And the idea is that Ethereum, it doesn't have a clear roadmap. It's not really clear about what its goal is, etc. So that's the history behind the FUD. I will actually say that this FUD has gone a little bit differently because since this FUD came up, there have been a lot of changes. And so, for example, the EF has had this very transparent roadmap, and they very much
Hmm,
clarified the purpose of Ethereum. And so, I would say that this FUD, to be honest, I don't know if it was really true in the first place, to be
mm.
honest. But I would say even now it's not true because over the past several months, we've just seen a lot of, like, leadership from the EF coming out and clarifying all of these things. What do you think?
Interesting. I just want to ask you about that. You said that the EF has recently come out and like clarified the FUD, or maybe just talk more about what the Ethereum North Star is. Like, what did it say?
So, according to Vitalik, Ethereum's goal is to scale to millions while preserving openness, censorship resistance, and privacy. The Ethereum North Star has also been described in the past to be the world's computer.
Mm-hmm.
And these are the North Stars. I think it's interesting to compare, like, what are the North Stars with other chains? So, for example, I'd say, well, Bitcoin clearly is not trying to be the world's computer. It's trying to be a store of value. Solana, in a way, in my opinion, is trying to be the world's computer, but maybe it doesn't focus as much on censorship resistance, on privacy, on decentralization, etc. So anyway, that's what Ethereum's North Star is. It is to scale to millions while preserving openness, censorship resistance, and privacy, according to Vitalik.
Okay. Okay. Well, I actually kind of missed this thought. I didn't notice it happening. But if the idea is that we're confused about what Ethereum is actually doing, I can appreciate that to some degree. I think even defining yourself as a world complete computer means you can do everything. So it's kind of weird that people would be confused when they are actually trying to do everything. But I do think it's kind of interesting where I feel like, okay, DeFi had its run and that was interesting, but also there were a lot of scams that happened. And there was a point in time where I feel like Ethereum or the EF, I might be wrong, but it felt like they kind of distanced themselves from DeFi. Like they didn't necessarily want to promote that kind of app creation on it. And maybe this was just me from the tweets I was reading, but that was the vibe I was getting. And I was very confused because I'm like, okay, yeah, there are a lot of scams. We could find other ways to fix it. But I actually think like this is like PMF, like, automating money transfers. So then they kind of went into the whole privacy stuff a lot and then scalability. And it's like they just went further away from the user. And I think that's my personal gripe. And I don't know if it like aligns with the no North Star narrative. I think Solana trying to be the fastest blockchain may not necessarily directly speak to the user, even though it still is, like you said, trying to be the world computer. But a fast blockchain is something that's definitely more user friendly. Um, so, I mean, I get it. I think it just, I don't know. It's kind of weird. Like I work for an infrastructure company right now, and I feel like there are lots of user problems that I don't think about actively. And I personally think the North Star should incorporate the user problems to
Yeah.
some. So in some ways, Ethereum not having a North Star, I don't think is a fair critique. But if you look directly at the foundation and what they talk about, maybe I would see why people might feel that way. But on the flip side, I do know they have these initiatives to fund people who are actually doing things in communities. I don't know if it's called like On Board the Next Billion or something like that. And it's something that happens every year and they give out these grants, people who are doing all sorts of cool stuff with blockchain, like farming and this, that, the other. So I can't say they're not like looking into that. But yeah, I just think it's like a lot of things trying to be solved at the same time. It does get confusing, but it kind of is what it is because no one is critiquing AI when you have people creating a bunch of random stuff. Like, are you trying to be an image generator? Are you trying to be my personal assistant? Like, figure it out. Like, no one is confused. No, people are like, yeah, I appreciate the fact that you're doing all these different things. So I think it's a bit unfair to criticize Ethereum for doing multiple things at the same time.
Yeah, I really like what you said where it's about how it relates to the user. And for example, in the example you just gave with AI, it's really clear how that stuff helps the user. Like, oh, I have an AI generate images for me. Oh, that's great. I have an AI be a personal assistant. Oh, that's great. And I think that the problem isn't that Ethereum doesn't have a North Star. I think that it is just sometimes difficult to communicate to a regular user why that should matter to them. So,
Mhm.
for example, of course, we want censorship resistance and decentralization and all of these things, but why does that matter to an average user? Really. I mean, and
Yeah.
I'll say to myself, like, if I'm just transferring someone a couple of USDC, I just want it to be fast and easy. If I'm talking about large amounts of money or if I'm talking about whistleblowing or I'm talking about all of these things, yeah, that's different, and I would need to go to Ethereum for that, but yeah, I just think we need maybe as a community, we need to do a better job of explaining why this should matter to users in the first place, because I don't think it's clear why any of that stuff matters. And instead, you could go to an L2 that has a centralized sequencer that doesn't have a real proof system, relies on a multisig, and you'd have a great experience. And we see that that is what users do.
Yeah.
So we see this with bridges all of the time. Users use the bridges that are fastest. They do not really care about the security of those bridges. So, um, Yeah, at TLDR, I think we just need to do a better job explaining why Ethereum's North Star matters to
Yeah.
regular users and how it affects them.
Yeah, I totally agree. I think maybe Ethereum's the thing is, we needed users in Web3 to basically test the product and see that it worked. But I think maybe some protocols like Ethereum, and I could be totally wrong, so someone please call me out, but maybe they care more about the infrastructure side of things. And maybe the founders of Solana / the people who are super involved in the community care more about the user side of things. And I think that is okay. But because Ethereum is a blockchain all encompassing, it would be good if they, spent more visible time in terms of like marketing and just app creation on more user stuff, I guess.
Mhm. Yeah, and I will give them credit. Like, they have actually, like, I know the EF has been doing a lot more of this. They've always done it to some extent, but they've been a lot more public about what they're doing to make these things happen.
Yeah.
And because, I'm one of those idealistic people that's, yes, I idealistically want this like privacy, decentralization, censorship resistance, etc. But overall, it's really a small amount of people who care about that. Like, yes, all of these people who build in blockchain care about it, but at the end of the day, if you want this to be a worldwide thing, you have to do something that users want. And maybe I'm just being too pessimistic, but I don't think we're ever going to get users to care about bridge security, about decentralization. I mean, people choose terrible passwords all of the time. Like, it's just not something we're going to get people to do. So we need to offer those things to users in a way that meets them where they are, so to
Yeah.
speak.
Yeah. I think that's the sad reality. Like we want them to care so badly.
Mhm.
Okay, I'm gonna do another
All right.
roll. Oh wow, this is perfect. No marketing.
No marketing.
As we just spoke about Ethereum's marketing. Okay.
All right, no marketing. This is another one that has kind of changed recently. So if you talk about, oh gosh, maybe 4 or 5 months ago, there was a lot of criticism that ETH had no marketing compared to something like Solana, which was very visibly marketing to apps and it was trying to get apps on it. Solana was being just a lot more visible in the ecosystem in general. Like, even though Solana is not a for-profit company, they were kind of advertising like you might think a for-profit company would do.
Mm.
And the FUD was that Ethereum isn't doing this, and because Ethereum isn't marketing itself, we're losing users to Solana. People don't know about Ethereum, people don't care about Ethereum, all of these things. And I think this one is tricky because if Ethereum were a company, then yes, it would make complete sense for them to market themselves, but ultimately Ethereum is not a for-profit company. And so I think there's a blurry line between what kind of marketing you should do.
Mm.
But that being said, recently they have created the like Etherealize, which is specifically meant to focus on this kind of for-profit stuff, whereas the EF is focusing on nonprofit like research stuff. So in my opinion, they've definitely made steps to try to market Ethereum
Right.
to, especially to outside of blockchain, particularly. So I think the criticism has come from that Solana is like marketing itself heavily to traditional finance, whereas Ethereum maybe isn't marketing itself as well to traditional finance. And if whomever can unlock traditional finance using blockchain will have a really big advantage.
Mm-hmm.
Anyway, takeaway. Yeah, I agree that Ethereum in the past has really not had any marketing, but I think that that's changing. And I also don't think that Ethereum needs your typical for profit company marketing. I think that you can get that from the applications, for example. Like, if
Yeah.
you have these killer applications on top of Ethereum, that will do the marketing for Ethereum for the most part. What do
Yeah.
you think?
I totally agree with that. I think about the internet. I don't know what the body is that's a nonprofit for the internet, but whatever that body is, they surely don't do marketing, but we all use the internet because we're trying to use Instagram, Twitter, etc. So exactly what you said with the application layer, sort of marketing the platform without even having to market the platform because you're just saying,
Mhm.
come use this really cool app. I think that back in the day, no marketing came across like alpha. Like if there's a project that has no marketing, you're like, oh, it must be good. This is some alpha. No
Mhm.
one knows about it. Gonna get in early. Whereas now, I think the expectation is marketers give you alpha. Like you have to
Yeah.
tell me why your project is interesting. Why should I participate? So I think that is a difference. Like back in the day, marketing felt like shilling. whereas now marketing is actually something that's acceptable. There's this company whose name is slipping me right now, but they were like one of the earliest marketing companies that spun out of Consensus, I think. And they were saying like, yeah, it was very hard to like get in front of technical people and like market to them because they didn't really appreciate it. And I think also in Web3 we have a lot of like developer marketing too. So DevRel, I know it exists in Web2 as well, but I think it's way more relevant and prominent here. And that's because the people that we market to for the most part are developers to build the killer apps to then bring the users. So yeah, maybe we don't have the user facing marketing, but I could still see value in education. Like I think marketing is not just telling you like we exist, but it's also educating you on why it's important. Like even why it's important for privacy. Like I think that is very interesting too. I wish people cared more about privacy in general, but like you
Mhm.
were saying previously, they don't. But I think when it comes to spending money online, like I don't feel comfortable with the fact that actually, even though my username technically is anonymous, there's still a way to trace all my transactions. So that's actually kind of weird. Like, really think about that. So I do agree that, you know, things like privacy could be something that could be explained. And they can use education or marketing through education to be able to explain why their roadmap matters. Just to look at some of the tweets that people said on here. One person, Ishita, she said 80% of Web3 projects are just marketing without building a legit product. That solves a real problem. I think this is one of the biggest gripes people have with
Yeah.
marketing. Like even myself, if I go onto a website of a Web3 project and they just have a bunch of marketing material and no like developer docs or something like
Mhm.
that, I'm just like, scam. So yeah, it's tricky.
Yeah, I agree. It's tricky. In my, this has also kind of been a debate on crypto Twitter. Not
Mm,
that crypto Twitter is the center of the world, but it's about this debate of marketing because, like, just like you said, you still have these camps that think that marketing roles in crypto shouldn't exist or it should just be able to be done completely by founders or completely by the development team, and that that's the most organic way to market.
yeah.
Um, I guess I'll say like my opinion here, which might be controversial. I don't agree with that. I think in reality, you need to get people's attention to use your product. And that is what marketing does. And who better to do that than someone who knows how to market something? 100%. I f- I feel like if I had to go and market a company, I am not someone who markets things. I would not do a very good job. And I think that you really see this in some projects as well, that they're really great projects, but they just don't market themselves. So not enough people know about them. Anyway, I think that marketing is a totally legitimate part of Web3, just like it's a legitimate part of Web2 and everywhere else in the world.
Yeah.
And that, yes, we need to market things. We need to market things with intellectual honesty, which is something that the ecosystem needs to work
Ooh.
on.
Yeah.
But in general, yes, we need to market.
That is crazy. That intellectual honesty. I didn't even know how to get into that. Like that in of itself, I feel like is a subtopic because yeah, you can
Mhm.
market that like, hey, we have the first quantum resistant blockchain. And it's like, prove it. Quantum computers don't even exist.
Yeah. Well, it's so hard because it's like, well, to get people's attention, you need to claim you're doing something novel. And I don't think a lot of the times when people have what I would consider intellectually dishonest marketing, I don't think is
Mm,
intentional. I don't think they're trying to lie to people.
yeah.
I just think it's more that they're not critically thinking through what they're saying. But yeah, all of the time. I mean, I'm sure we both see marketing in crypto from even some larger name projects where you're like, I know that that's not true. Or you're
Yeah.
like, that statistic you said, like that isn't true. I think or like, oh, there's more nuance to that. So the biggest one is my gripe is transactions per second. So I think that you
Mm,
either care about execution or throughput. If you're caring about execution, then you should care about like gas per second because that's the rate of execution. If you're caring about throughput, you need to know how many bytes per second. Transactions per second is a terrible, maybe if I'm going on a mini rant, it's like a terrible metric because it doesn't tell you what the size of those transactions are. So you can't know the throughput. It doesn't tell you how difficult those transactions were to
yeah.
execute. Maybe they were all just like the simplest ad operation and that was all. So I feel like transactions per second is something that's kind of like it's on a blurry line. I don't think people when they use transactions per second to market, I don't think they have ill intention, but it's also at
Mhm.
the same time it's really not telling the whole story whatsoever.
Yeah.
Anyway, mini rant about transactions
No,
per
I
second.
love that because that was a big thing at one point. Like, back in the days where everything was about read
Yeah.
the white paper, transactions per second was like a big metric. I remember even like one protocol I was looking into, they had a crazy claim about transactions per second. And I'm like, how do you even know? Like, you don't even get that many transactions per day. Like, make it
Mm.
make it make sense. But I
Yeah.
think marketing is like it's a very humbling career, I would say. The reason why is because you have to like dumb down things a lot. I don't even want to use the word dumb, but like you have to simplify things a lot for the average person to understand. And I think transactions per second, even if it's not accurate, it helps send the message. And
Yeah.
maybe yeah, I have to like really soften my POV on things like that because I realize that that's the way you get the message across. Because I can't complain and say, like, oh, we're not marketing to end users, but then want to talk about all the technical details about how the thing
Mhm.
works. I
Mhm.
even saw today on the news, the NFL, like, there was this piece about them using TikTok to market their games, and they're marketing it by talking about their schedule, like, oh, we're going to be playing in here. And when they're in the UK, like, they'd have the actual players like doing like a British accent. And like I could see someone on the team being like, "What the fudge? This is the most ridiculous thing. Like we
Mhm.
should be training for the game."
Mhm.
But it's getting them eyeballs because a lot of people are spending their time on these apps like at least 4 hours a day. I think is the current stat. So you have to kind of humble yourself and recognize that if you want the users to come, you have to go to where they are and come to their level. So I think the intellectual honesty, I definitely 100% prefer if a project is intellectually honest, but I do understand why they might say something that might be a little bit rough around the edges for the purpose of
Mhm.
getting the message across.
Yeah. Yeah, it's definitely I completely agree with that. It's tough, and I think it's tough well, I don't know this for a fact, but I would guess
Mm,
it's, even more difficult in Web3 because it's so much more extreme attention based. So, for example,
mm,
you have things like meme coins that get everybody's attention for a really, really short amount of time, and then everybody just loses their attention completely. And the thing is, a lot of blockchain stuff takes a long time to build. Real things take years to build, but you need to keep people's attention during that entire time, and it's really hard.
yeah.
So, yeah, I think crypto marketing is very hard, but I am glad that I don't have to do it. Like, honestly, I would much rather do my current job, and I don't know what I'm trying to say, but basically, I
Yeah.
think marketing is, like, harder than my job that I do now, in my opinion, so
Yeah, I think marketing is hard. And I think even like you have to put in a lot of time like doing research even outside of work. I
Mhm.
mean, we have to do that as engineers too. So maybe it's actually quite comparable. But like you have to like have all the context as well. Like follow
Yeah,
the trends. Like it's ridiculous.
yeah.
So I would say no marketing is real FUD, but they're working on it.
Mhm.
Okay. Another shake. Oof. Oof. L2s are multi-sigs.
Oh, this is a good one.
This one is heavy.
L2s or multi-sigs, yeah, this is such a can of worms. So the context behind this is that L2s are not actually as secure as they seem, and this applies to bridges too a lot as well. The history of the term is that an L2 says, "Oh, hey, we have this proof system, we have all of this stuff, we're really, really secure." But it turns out that the rollup itself can be completely controlled by only a few signatures or only a few keys. And what these keys can do is they can do things like just disable the fraud proof system. If it's an optimistic rollup, they can arbitrarily change contract code, arbitrarily change the settlement contract to settle whatever they want. And the idea is that, a lot of L2s are saying how wonderful and secure they are, but they're really not under the hood. And this is kind of the whole point of L2 Beat is to point stuff out like this and to point out where perhaps the good, like nice, secure features we have are being completely undermined by other features that are completely insecure. So L2s are multi-sigs. This one, hmm, what's your opinion on it? And then maybe I'll give my opinion.
Okay, so for those who don't know, a multi-sig is essentially a wallet that has multiple private keys that have to sign before a transaction is approved. So imagine all of your friends controlled like piggy bank where you keep your money, and if you wanted to make a transaction to spend from it, you all have to give your signature so that you can get money out of it. So when it comes to smart contracts and all L2s in general, like they all have smart contracts on Ethereum. So sometimes people, I think Ben even said this, like an L2 is a DApp or just another Ethereum app, right? So they have a smart contract on Ethereum, which makes it possible for users to deposit their funds, and it goes onto the L2 and back and forth, just communication between the L1 and L2, and also for them to, post their transaction history, which is secured by L1. Okay, beautiful. So let's say one day a developer decides that he wants to update the contract to something malicious so that he can drain all the users' funds. Let's say it wasn't behind a multi-sig. Let's just say just one personal private key. He can do that, or he can get hacked and that person can do it. So that would be super insecure. So one level up is if you have a multi-sig, which is a group of key players, I would assume people on the board or the founders who are able to sign before an upgrade goes through. Now, I think the idea that L2s are just multi-sigs, I could see why they would say that, because if everything that's secured in the L2 is secured by the ability to have control over that contract, for example, by an upgrade, then yeah, that could kind of make sense if they are secured by a multi-sig. Whether or not it being secured by a multi-sig is a bad thing or not, firstly, I would say it depends on the multi-sig itself. Like if there is a low signer threshold, like 2 out of 3, or I don't know, 1 out of 10, even if it's 1 out of 10, like one person can still make the transaction go through. So you should have like a really healthy one. What I've been seeing, like Aave, they have 5 out of 9. And the people who are signers, they tend to be from other DeFi protocols. So therefore, like, they have different levels of incentives in just blockchain in general. So I think that is obviously a bit better than having a multi-sig with a lower threshold. I think another solution is if you don't use a multi-sig altogether and you use governance, for example, to handle the voting handle the changes. So if everyone votes it in, then the change can happen. So L2 are multi-sigs. I get it. It's a fair point. How bad it is depends on what they've done to actually decentralize that multi-sig and make the multi-sig, hard to hack into. What are your takes, Ellie?
Yeah, I could agree with that. And I think obviously the work of L2 Beat has pointed this out, and it's really made a lot of L2s increase their security and fix their multi-sigs. I think another new point of nuance is time locks. So time locks are this idea that even if you did get all of the signatures from a multi-sig, you have to wait a certain amount of time, like 24 hours, before the change can go into effect. And some rollups have time locks on all of their upgrades, other rollups do not. And the idea is that, well, even if a malicious code upgrade was signed by everybody in the multisig, you have this time lock, and that would give users enough time to withdraw their funds. If they disagreed with this upgrade, it would, give users time to exit, basically, is what it's for. So that's another part of the nuance. There's a few different arguments about time locks. I'd say the strictest argument is that they should be at least 7 days, ideally over 30 days. And this is because you want to give users really a ton of time to exit, because not every user is online every single day. But obviously, for things like security updates, waiting a month isn't really going to go well. For example, if you have a key that gets compromised in some sort of contract and you need to upgrade that right away, like you can't wait a month. So this is what they have. They have these things called security councils for, and basically they are multi-sigs, which, like you said, they should be fairly large, but their sole purpose is to kind of act in the case of an emergency. But it's a trade-off on what their time lock is. Because, for example, maybe you do want there to be a time lock because you don't want the security council to be able to arbitrarily, drain your funds. But then at the same time, if the time lock is too long, that's now that an attacker has like more time to, get an attack or to compromise a system, etc. Anyway, I think there's a lot of nuance to L2s or multi-sigs, I guess, is the TLDR. I think that if you would have asked me 2 years ago, I would say, yes, this FUD is totally legitimate. I think now enough of the rollups really are making changes that I don't think it's as legitimate anymore.
Yeah. Interesting. I didn't even know this FUD was FUD for such a long time. It's funny because I could see there's this tweet. Actually, let me pull it up. There's this tweet from Ansem saying, "Y'all just now finding out all these L2s are secured by multi-sigs. Y'all are joking," or and that was in 2023. So yeah, clearly it has been around for a while. But you know what? Like, shout out to L2 Beats 1, 2, 3 times. Like, they have really made it possible for users to be empowered to understand the security risks if they care to read. But even if not, like really highlighting that this is a particular security model of a roll-up, makes it so that roll-ups now have more accountability about making sure what they do is legitimate. I went onto L2B recently and they had this fully fleshed out diagram showing Arbitrum's governance. And I'm like, what? Like, I don't even know if Arbitrum's website has this.
Yeah.
So I'm really grateful for that. And I think that with all these things, it goes back to what we said in the previous episode. Like, we just need the security assumptions to be very clear and plain as day, which it isn't. But, definitely check out L2Beat if you're looking to understand more deeply about this.
Yeah. I mean, I've never met someone who dislikes L2Beat. Like, I would like to find that person and chat with them.
You need to
Yeah,
go
I
to the
completely.
lowest ranked roll up and then see.
Yeah. But it kind of goes back to the marketing thing where it's you 100%. I agree with you. We just need to be clear about the security assumptions, but it is kind of difficult to communicate that very concisely to users that aren't familiar with the space. So if you're not into crypto whatsoever, how do you communicate? Like, you can communicate the concept of a multi-sig, but how do you communicate all the consequences that has? It's it's a tough challenge, I think.
Yeah. Yikes. Maybe they're leaving it to the application developer to like create a secure enough system despite it all. I really don't know.
Mhm.
It is tricky.
Yeah.
Okay, so this one we would say not, we wouldn't say this is FUD. This is not FUD.
Not
It's
anymore.
not, yeah, not anymore. Okay. Rolling. Okay. I got fees too high. Did we cover that?
No, I think we did fees too low,
Okay.
right?
Yeah, I think so.
All right, fees too high, which is in contrast to fees too low. And you actually do hear both of this feedback in Ethereum, which is kind of wild. I think the fees too high FUD makes more sense. It's not necessarily true, but if you have really high fees on Ethereum, it does make it difficult for users to use. If you have fees that are really high, users cannot use it for just daily transactions. And so I think that that's really legitimate. And yeah, I'll go and retell the story. When I was on Uniswap back in 2021, like, it was really expensive to use Uniswap. And I think a lot of people experienced those super high gas costs during the whole DeFi boom. Um, so anyway, yeah, fees that are too high are bad. I agree with that. Are Ethereum's fees too high? That's a difficult question because we have L2s and L2s can be cheaper. And I think it makes sense that if you want cheap, like, just, quick payment transactions, that you don't necessarily need to do them on Ethereum and you can have them cheaply on an L2. But if you're doing some transaction that has a lot of value to it, yes, you want to do that on the L1. I'm not really sure. To be honest, my opinion is that I think that lately Ethereum's fees have been very reasonable lately. And so I don't really have too much of an opinion on it. Maybe I'm just so scarred though from like how high they used to be in the past that anything that's not like a $10 to transfer like money seems good to me.
Yeah.
I don't know. What do you think?
Wow. When you said, like, you totally swayed my thinking when you said, do we need Ethereum's fees to be like low or very low? And that made me think differently because especially if you view Ethereum as a settlement layer or the security layer, then maybe the fees too low or fees too high argument has a limit. Like, there's a point where Ethereum's fees could be higher and it's fine. Geez. And like, yeah, even if you're transacting big value, like I know a lot of NFT projects, some of them are only on Ethereum because maybe they trust Ethereum the most. So that can be equated to like how valuable the project is to some degree. I was not thinking like that originally. Originally, I was thinking like, no, like blockchain technology. I think the one thing that makes it shine is the ability to do all these micro payments. Like if I want to go buy
Mhm.
bananas in the market, like I'm using like, I don't know, max $5 or something. Like
Yeah.
I don't want my fees to be $2. And right now,
Mhm.
Ethereum fees, depending on the application you're interacting with, it could be around $2. So I still think it's too high. Like I need that transaction to be cents. Like for me to
Mhm.
feel like, oh, I don't even think about it. I
Yes.
saw this one tweet. I don't know if it's actually on here. Oh yeah. So Nirel, he was like, just one example to show why hiding gas fees is absolutely necessary. When you go shopping, you pay for the price on the tag and you don't pay the extra 1 cent to the Visa. The store does. In crypto, it's the opposite. And I appreciate that POV. And I do think that would just have the mental bandwidth you think to then think, oh, I have to pay gas fees just makes you not want to do it. And I do think not showing it would be great. But the reason why it is shown is because we do have variable fees. It's not just one fee. Like the way how the blockchain works is that you have transactions submitted to a block, and the size of that block is constant. So therefore, if you have a lot of transactions being submitted at one time, then that means the demand is higher. And they've made it so that you can actually pay more for the transaction. Whereas you don't ever hear about, well, at least I don't know about, maybe this happens behind closed doors, but like I don't hear Visa saying like, okay, guys, like for the next few days, transactions are going to cost this much more. I'm sure they change it over time, but not like so variable like it is in Web3. So I think it is a bit tricky to hide it from the user, but I think that could be a good experiment. But back to your point about whether or not Ethereum's gas fees need to be super low, maybe it doesn't. I would personally prefer to use one chain transparently. So I personally wish it was lower. Sorry. But I can see value even from a technical perspective, even from like, being able to pay validators perspective.
Mhm.
It probably doesn't need to be super low.
Yeah, I agree. It's just tough. Maybe if I was an economist, I would have a more informed viewpoint, but I don't. I guess if I take a stance one way or the other, I'd say right now, Ethereum's fees could be a little bit lower, and I would like that, but I don't think they necessarily need to be as low as like L2s, because
Mm,
that's kind of the purpose of L2s is to handle that stuff.
yeah.
So anyway, are fees too high? FUD, I would say no, I don't think so. Um, yeah, it would be nice if they were lower on Ethereum, but I don't think it's a systemic problem necessarily because you can just use an L2.
Yeah. Yeah. Okay. I feel you.
Mm,
I feel you. I agree. I would say yes, it could be lower. I don't mind alternative L1s, but I do love the capital Ethereum has built up over the past however many years it's been in existence for. So therefore, for me, I feel like I trust Ethereum the most because it literally
yeah.
has been in the game for the longest. So I personally would want Ethereum to win purely because of that. But maybe 10 years from now, I'm just like, oh, I'm indifferent. Like I don't care. So yeah, are the fees too high? I would still say yes, but it's not as big as a FUD as it used to be circa 2020 to 2022.
Yeah.
Another roll, guys. Okay, I got espresso.
Espresso is not FUD.
Not FUD. I have gotten MEV centralization.
All right.
MEV centralization. Where do we begin with this one?
Yeah. So I guess the history behind this is that, well, this kind of overlaps with one of the other items on the FUD dice. So maybe we can combine them into two.
Yeah.
One of the other items on the FUD dice is builder censorship. And anyway, the idea behind this is that MEV is very profitable. And we have this paradigm now in Ethereum where proposers outsource building their blocks to people that know how to do it very, very well and can extract a lot of value. So here's the components in Ethereum. You have the Ethereum proposer. And originally, the Ethereum proposer was in charge of building the block and then proposing it to the network. But there's this thing that came along called MEV Boost, and basically it let the proposer outsource their building to someone else who is better at it. And so today we have what we call proposer builder separation. And what that means is that we have these builders who are really sophisticated in just building blocks that are really, really valuable. And then we have the proposers who just propose whatever the builder gives them. And this is beneficial because these builders generate something called MEV, or which is maximum extractable value. And it's by ordering certain transactions a certain way in a block, they can extract extra value other than just the transaction fees that you would normally get. So, for
Mhm.
example, a builder might do arbitrage between a centralized exchange and a decentralized exchange. And when they do this arbitrage, they earn money that they wouldn't have otherwise gotten from transaction fees. But so anyway, that's like what this whole builder proposer paradigm is. But we've kind of ended up with something where there's very few builders. So I'd say a year ago, maybe there was five or so main builders. Nowadays, there's two builders basically that build for the entire Ethereum ecosystem, Titan and Beaver build, if I recall correctly. So the FUD here is that, well, if the people who are building the blocks are completely centralized, what is kind of the point of having a decentralized Ethereum? These builders can do things like censor, which they do. Actually, let me bring up that slide. So builders can censor, which is something that they very much do. They will censor, for example, transactions from addresses that are sanctioned by the United States government. And this isn't good because the whole goal of Ethereum is to be censorship resistant. They also can do what people would view as negative MEV, which in general, MEV is viewed as negative because really it's hurting the users
Hmm.
uh, at the end of the day. And people argue that you don't want to have these builders that are constantly front running users and hurting their prices so they can generate money. And the user should be able to get that value back. So, this is kind of the problem with MEV centralization and builder censorship, which are very related, is just that we have so few builders. Have we just undermined all of the things we're trying to do in Ethereum anyway? All right, what do you think?
Oh, geez, Louise. Okay, so MEV in of itself as a concept, I think not many people or users, like proper just end users, are aware of. So even the idea of it being centralized is like, shmur, what do you mean? I
Yeah.
think that even before we had builder centralization, or even whether there's builder censorship, there was also validators running the route. Like they could decide which transactions get included. And of course, like there are, some companies, depending if it's a proof of stake blockchain or not, but they might be the majority validator set. So it just seems as though like if there is a job that's complex to do, like combining the most profitable block is what the builder is incentivized to do because they get cutbacks as a result of it. But to do so, you probably have to be the most skillful in the space. So it just seems to like trend to that centralization, not necessarily for the purpose of being evil, but more just for market economics. I
Yeah.
think that okay, so I actually have not used flashbots yet, but the way I understood it is that even though we have proposed a builder separation, we have these builders who are able to build the blocks. I thought that you as like a developer who is trying to capture, let's say, arbitrage, which I think is like not an evil MEV. Like front running, I would say is evil MEV. So let's say they're just doing arbitrage, making markets efficient. Cool. Can they not like use one of the Flashbots tools to make a bid to a builder so that they can include their transactions? Or is it that their transaction goes into like a private pool? Like I'm really not too sure how it works, but the way
Mm.
how I interpreted this is that if there is this builder market that's created, but we do have a way to like make a market out of it, which means just like people are paying to put regular transactions, these guys are paying to put these profitable transactions. Maybe that is the best that we can do, given that we are all capitalistic. I don't know.
Yeah, we should do a whole episode to like MEV, but so yeah, builders. So there's this other party called searchers, which are basically people who
Right.
might specialize in a very specific thing. Like they only specialize in arbitrage on Uniswap, for example, and
Yeah.
they build these bundles of MEV, and then the builders just put them all together.
Hmm.
So going back to the question, is builder centralization and builder censorship ruining Ethereum? Uh, there's a lot of different opinions on this, and I'd say that you could argue yes and no. Right now, Ethereum is working on things to counteract this. So,
Hmm.
right now, there's this research initiative called Fossil. And the idea is that you have these things called inclusion lists, which say that builders still get to order the entire block, but they have to include certain transactions,
Right.
regardless of if they're sanctioned or whatever. So that's a piece of research right now that's very popular in the Ethereum research community. And then as far as builder centralization, I think that's a much harder problem to solve. But there's also some people who argue that maybe we don't need to solve it. So
Hmm.
as long as we get censorship resistance,
Right.
perhaps it's fine. There's also other solutions for different kinds of sequencing. So there's what's called application specific sequencing, which is where you have some, for example, you have some smart contract on your application that ignores the transaction order that it's given and then sequences on its own according to some rules. You also have a lot of L2s whose sole purpose is to offer some sort of fair transaction ordering that does not extract a lot of MEV.
Right.
I think that these are all very viable solutions. I'm not really sure what the right answer is. I think in some cases, it's totally fine to have a builder that's extracting a bunch of MEV. I think in other cases, you want fair ordering. But then again, we should really just do a whole episode on this because fair ordering actually does not get rid of MEV like people may think. So I don't know. This one's really tough, but I would say that since we have inclusion lists on the roadmap for Ethereum, I would say that builder censorship and builder centralization aren't nearly as much FUD. I think
Right.
there's still some stuff we have to figure out, but I think we're headed in the right direction.
Yeah. I think no, because you mentioned inclusionless, we probably should move on to Beam Chain next. But
Yes.
before so, with builder censorship, I think one thing we didn't talk about yet is just the idea of transactions being censored, meaning like because we now have these builders who are very much in the majority, if there is somebody who needs to be censored or some group, then it'll be very easy to do so because you go to those companies and you're like, look, don't include those transactions. I personally, surprisingly, or I don't know if it is surprising, but I actually don't mind some censorship, especially if it comes from like the OFAC and stuff like that, because it tends to be because the person did a crime. I believe in open finance 100%, but at the same time, not everyone is going to have the best intentions with the way that they spend their money. And we know that money is powerful. So if you're able to transfer money and put it into bad people's hands, that's not great. So I actually don't mind censorship as much as maybe the other person. I think if you think more idealistic and like everybody's a happy, positive person, 100%, everybody use a thing, but that is not what life is like. So yeah, I think builder censorship, as we see in these diagrams that we had up, it definitely is decreasing. So I don't know how it's being chosen, but I think if there's a real reason or cause, like I actually don't think it's a bad thing. I think we should be able to censor things that are genuinely bad. But it's kind of tricky because now who is the person who gets to decide that?
Yeah, that's the tricky part.
I don't know, guys. Let's just figure it out.
Mhm.
So yeah, I say builder censorship, I would say is not FUD. But I would say MEV centralization also is not FUD, mostly because of how complex that space is. And I think thankfully for Flashbots, we do have like, I guess, good mechanics to work about how it works exactly right now. Or like good
Mhm.
mechanics to like, include people who want to participate in that. So
Yeah. All right, yeah. So let's go on to Beam Chain 2029. Yeah, this FUD, you can tell that these dice were made around the time that Beam Chain was announced. So Beam Chain was this thing that was proposed at DevCon in 2024 in Thailand by Justin Drake. And it was this futuristic roadmap for Ethereum. It's, how are we going to get to the end game for Ethereum essentially? And Beam Chain relies a lot on real time proving and ZK proofs. So the idea is that instead of having every single node in Ethereum have to re execute everything, you can have some really powerful nodes produce a proof for it. And then everybody else just has to verify that proof, and it's really cheap. And this is
mhm.
a really good way to scale Ethereum. It can also be really good for composability. It has a lot of benefits. And there are some other details about Beam chain as well. But essentially, it's just like the end goal for Ethereum. The FUD behind this is that it was announced with a 5-year timeline. So it was announced that in 2024, so it would be done in 2029. And a lot of people were very upset at that because they said that's such a long time. We need these changes in right now. And that's just way too slow. So that's the FUD around it. As well as there was just FUD on the idea itself. I think people also just disagreed on the direction itself. So I don't know. I guess what's your take on this?
Hmm. I think 5 years to change Ethereum in a very significant way where we're solving multiple problems, bringing in multiple EIPs is not just about one particular problem they're solving. I do think it's realistic. I have never been a part of the team who upgrades Ethereum, but I could imagine it's a very stressful, very careful process to make sure nothing breaks
Mhm.
because we are securing money and, there's a lot of funds, like billions of dollars locked in Ethereum. So I think anybody who has fought against it would also be equally mad if they lost funds because they rushed an upgrade. I think it's way more important to get it right in this scenario. It's not like you're building Facebook where you can just build, you can break for a day and it's like, oh, I couldn't
Yeah.
post. Like, okay,
Mhm.
that's probably good. You're probably going
Mhm.
to say some crazy thing anyway. um, but like, I think like with this, like, this is money, this is finance. Like, think about Lloyd's Bank or whatever is your favorite bank.
Mhm.
Like, yeah. So I think the thought is just more just the idea that, Ethereum, people have gripes with Ethereum as it exists, as we can see from this entirely long FUD list. And a lot of it has to do with scalability. If we really summarize a little bit, yeah, there's some decentralization or centralization comments as well, but more so, I think scalability and usability is the biggest gripe that people have. So to hear that you have to wait 5 years for your favorite EIP to be included, I get it. It's frustrating for sure, but I think it's better to be realistic and careful about it than to give us a short timeline and break every single thing. So I think this FUD is not warranted. Also, I think people are kind of disillusioned in general in the crypto space at the moment. They're kind of fed up of all the tech stuff. Like, oh yeah, we're gonna do this and we're gonna make it a snark and we're
Yeah.
this and yeah, and then we're gonna have sharding and bro,
Mhm.
what?
Yeah.
So
Oh,
it's
yeah.
partly that.
I agree because another thing with Beam chain that came up was kind of this idea that maybe Ethereum would kind of go back to the sharding roadmap, not
Mm,
exactly complete exactly as it was, but there's this idea you'd have these native rollups, which for all intents and purposes are essentially shards, like was originally designed back when we were considering rollup centric roadmap and scaling Ethereum. So I think a lot of the FUD is also, well, should we have done this in the first place? Was the L2 roadmap completely the wrong decision? Some people think that it was, some people think that it wasn't. I personally think it was the right decision. Anyway, yeah, that's just some more context behind Beam Chain. I think some important nuance here is that it doesn't mean that we have to wait until 2029 to get all of the features of the Beam chain. There's a
oh,
lot of them that we can get incrementally and that we absolutely will get incrementally. And we're already starting to see, like Pectra was recently finally deployed on mainnet, and that has a lot of these really good features that enable the end game of Ethereum. For example, it increases the blob count, which allows Ethereum to be more competitive in that sense. They're going to increase the blob count in the future. That's just one example. So anyway, summary is that we don't have to wait until 2029 to get a lot of these things. And but yes, I totally agree with you. Ethereum is one of those things where you really have to get the upgrade right. And it's actually pretty impressive that Ethereum has never broken like on mainnet in the entire time it's been running. Like you can't say that for a lot of other blockchains if we're being honest. So yeah, I think it's fine to have it like take time to do it right.
yeah.
And I don't think that that means you're necessarily moving slow. You're just doing a task that is really difficult. And so therefore it takes time.
Yeah. That's perfect. I totally agree. So this is definitely not FUD.
Mm.
Awesome. So I think that's a really good ending to the entire FUD list because it really like encapsulated just all of the things that people have concerns with, which, it's fair to have concerns and be critical and ask questions. And I love crypto Twitter for this. A lot of the screenshots from the post on this podcast, if you're watching in the video, you'd see the post. But like a lot of them came from crypto Twitter, which just has like so many very intellectual conversations, which is very refreshing, but also a lot of arguments, which is also
Mhm.
entertaining.
Yeah.
So this was a fun one to prepare for and do for sure.
Yeah, I agree. This is fun to kind of say our opinions on things and dive into all of the FUD. I don't know. It's just kind of fun to like argue back against the FUD. I guess the
100%.
yeah. Okay, so I guess the takeaway is what about Ethereum? Does Ethereum have a future or is it dead and we should us all move to Solana? That is
Damn.
the question to the audience. In my opinion, no, Ethereum is very much not dead. And I don't understand why people think that, but or rather I understand, but I just disagree. But I'd be curious to hear other people's thoughts.
Yeah, definitely. Please leave us some comments and we will try to reply to them as well. So thank you so much for watching and we'll see you in the next one. Bye.
Bye.
Hey, this is Ellie and Alysia. Thank you for joining us on another episode of Composable. We love hearing from you, so please hit us up on Twitter at ComposablePod. Send us feedback and join the conversation.
Our episodes go live every 2 weeks at 7 a.m. Eastern Time, so make sure you like and subscribe so you never miss an update. And you can even enjoy with your morning coffee. Share it with your friends and fellow builders.
We'll see you next time on Composable.